Hello everyone! In this video, pag-uusapan natin ang recent move na ginawa ng Seven, kung saan nag-declare ng 100% stock dividend para sa mga shareholders ng Seven. Dito sa 1:1 stock dividend, makakakuha ng additional shares ang mga shareholders. For example, meron kang 100 shares before the ex-dividend date. Magiging 200 shares ang Seven mo pagdating sa distribution date. So, ang nangyari, Seven cut its price into half. Kaya biglang nangalahati ang share price pagdating ng ex-dividend date. Ang closing price as of August 1 ay 68.2 pesos per share. Nagdoble ang number of shares pero bumaba rin ang share price. Overall, value ng investment, same pa rin. Yung move na ito na ginawa ng Seven can make the share price appear more affordable para mas maging attractive siya to new investors. Wala akong hawak na Seven sa ngayon pero ginawan ko ng stock analysis para ma-check yung fundamentals of the company at kung meron bang buy opportunity. Kung bago ka sa aking channel, meron akong simple framework na ginagamit sa pag-analyze ng stock. Natutunan ko ito sa Value Investing College noong working pa ako sa Singapore. Ito ang mga key metrics na dapat i-check following the PEACE framework. PEACE stands for profitability, inflow of cash, efficiency, conservative, and economic mode. So number one, earnings per share or EPS to check kung profitable ba ang company. Number two, operating cash flow to assess inflow of cash from its operations. Number three, return on equity to check how efficient the company is in generating profits from its shareholders' equity. Number four, DE ratio to assess the company's financial health. Number five, economic mode by checking the growth rate sa key metrics to assess if the company can sustain or continue to grow over the next 10 years. Let's go! Let's start sa revenue or top line and earnings. Nag-grow ang revenue and earnings over the past 10 years. Mababa nga lang ang profit margin ng 7. Nasa 4.4%. Pero higher na siya compared to last year's profit margin na 3.5%. 10-year revenue growth rate ay 16% and 12% naman ang 5-year growth rate. Affected ang earnings ng Seven nung nagka-pandemic, kaya negative earnings noong 2020 to 2021. Pero nakabawi naman agad after the pandemic noong 2022. 5-year and 10-year growth rates sa earnings ay 18%. So, consistently growing ang Seven over the past 10 years. I'm using Simply Wall Street as a research tool. You can sign up for a free account on Simply Wall Street using my link below kung gusto mong itry. Sa profitability, ginagamit ang EPS para malaman kung magkano ang profit for each share at para mas madali ring makompare versus other stocks. Ang criteria sa EPS ay it must be consistently positive and growing. Nag-grow ang earnings per share. Kaya lang affected ng pandemic ang Seven, kaya negative EPS noong 2020 and 2021. Hindi pandemic proof ang Seven. 4.61 pesos ang kita per share noong 2023. Ang 7-year EPS growth rate ay 17% and 18% naman ang 5-year growth rate. Sa inflow of cash using operating cash flow, ang criteria ay it must be positive and growing. Malaki rin ang growth rate ng operating cash flow ng 7. 21% ang 10-year growth rate. Consistent na mataas. Sa return on equity, ang target naman dito ay 15% and above. Mataas ang ROE ng 7, 27.2% versus 9.5% sa industry's average. So, highly efficient ang 7 sa pag-generate ng profits from its shareholders' equity. Ito naman ang historical ROE data ng 7. Mostly above 15% except lang nung nagka-pandemic nung 2020 and 2021, bumagsak kasi negative ang earnings. Healthy rin ang balance sheet ng 7. Ang baba ng utang at 0.6% DE ratio and merong 14.71 billion pesos na cash. Pasado ang 7 sa 4 key metrics. 7 is profitable with growing operating cash flow, highly efficient in generating profits from its shareholders' equity, and conservative din. Mababa ang utang. Next na i-check natin ay ang moat. Sa pag-evaluate ng moat, ginagamit ko yung criteria sa book na rule number 1 ni Philtown. Ang investment approach ni Philtown ay heavily influenced by Warren Buffett and Benjamin Graham's value investing approach. Dito sa rule number 1, all the big five numbers should be 10% or greater if the company has a competitive moat. And the numbers should be stable or growing over the past 10 years if the moat is sustainable. Mataas ang compound annual growth rate sa 4 key numbers. Yung 1-year, 5-year, and 10-year growth rates ay above our target na 10%. So, pasado ang 7 sa 4 key numbers. Mataas din ang return on invested capital or ROIC, above our target na 10%, except lang nung nagka-pandemic noong 2020 and 2021. Overall, very good ang fundamentals ng 7. Maganda ang naging performance and consistently growing over the past 10 years. Affected nga lang ng pandemic just like the other companies, pero mabilis din siyang nakarecover. Here's the future growth forecast naman ng mga analyst ng Simply Wall Street. Ang growth forecast sa earnings at EPS ay 13.3% and 14.2% naman sa revenue. 7 expects to hit the 4,000 store mark by the fourth quarter of this year. And then mag-open pa sila ng 450 new stores and remodel older branches. Ang fair value estimate ng Simply Wall Street ay 79.28 pesos per share. So 14% lang ang upside potential. Pag maglagay tayo ng 30% margin of safety, ang buy below price ay 55.49 pesos per share. Ang 12-month target price ng MSN Money ay 67.5 pesos. Ang upside potential ay mababa pag bibili at the current price of 68.2 pesos. I'll wait for a buy opportunity pag ako bibili ng 7. Mas gusto ko higher ang upside potential. At least 30% margin of safety. I hope you found this video helpful. Pa-like and share na rin para makatulong din sa iba.